Hi, I'm Mike Goyle with Inside Exploration. Today I had the chance to sit down with Mark Selby, Chairman and CEO of newly formed Canada Nickel, Vance White, President and CEO of Noble Minerals Exploration, and PGO and Vice President of Exploration, Randy Singh from Noble Minerals Exploration. I can't tell you how much I appreciate you guys sitting down with me today.
Yeah, thanks, Mike.
Thanks, Mike.
So Vance, you've had this project since 2011 now.
Correct.
You've done a lot of work on it, and the key focus seems to be nickel now with the new company being spun out in Canada Nickel.
Correct.
But you have a lot of other targets on this project. Talk to us a little bit about that first.
Well, when we first picked up the project in 2011, we carried out the initial airborne geophysics and EM and MAG that over the northern 6 townships in order to follow up on the principal purpose for having acquired the project being the Kings Mill nickel target. And as a result, we carried out that program over the course of the I guess it was early 2012, and then a drill program in 2012 on the Kings Mill, but as well a project on the Lucas Gold project, which is down to the southeast part of the project area. Exploration markets were tight at the time, financial capital markets were tight at the time, but we were able to amass this very large project area, which was at the time about 53,000 hectares. And we've been able to grow that to about 79,000 hectares as a result of acquiring additional mining claims over the course of the last number of years. Since that time, we've carried out additional compilations, geological compilations of all kinds of stats that from the early stages of the exploration that was carried out by majors, including Inco, Falconbridge, McIntyre, Porcupine, whatnot. And that was carried out by Oryx Geosciences, who are a well-recognized geological team and geoscience team in Toronto. And we've decided to move the project forward through a business model which is referred to as a project generator model, and invited into the project area a number of either junior or mid-tier companies to carry out the next stage of exploration in order to de-risk to a certain extent the exploration end of the model. That allows us to take on large equity positions in the companies that are coming in. It allows us to de-risk, as I say, the next phase or the drilling phase of the exploration in order to determine whether we have a number of economic deposits or otherwise. You've got to remember that this project sits only a couple of kilometers north of the Kidd Creek mine, which has been in production for the last 60-odd years. It's produced about 160 million tons, very rich VMS mega deposit. And normally associated with those VMS deposits or mega deposits are satellite deposits that could run anywhere from 30, 50 million tons. That being the case, you find something that has economic grades, you're going to have a lift on either the joint venture partner that comes into the project, or you're going to retain an interest as a result of the way the deals have been structured. So
you talked about de-risking the project, and you brought in some geophysics tools that were utilized in the project, but you also used Windfall Geotech's card system.
Yes.
Explain to us how that really helped garner some attention, because I know obviously Mark got interested in this project, but what benefits did you see? And maybe this is something maybe more for Randy to kind of talk about with the use of AI.
Yes, AI helped us because this project had so much, quite a bit of exploration work throughout it, dating back to the 1960s. AI helped us use that old exploration data, the drill results, and the modern geophysics that we did, and predicted where the core of the mineralization would be heading in what direction. It literally vectored that mineralization for us. So it was very helpful in producing a number of nickel, copper targets, and also zinc targets.
So they've identified targets for you. Do you still have further targets to expand on from Windfall Geotech?
Yes, but we only did 2 townships with the AI study, and the project is 14 townships.
So the nickel deposit extends into the other townships, or so you think?
Yes, yes. Because their mandate was just limited to the two townships, they didn't go outside the boundary of those townships. But we know the Crawford nickel body extend into the Lucas Township, and the same way that like the Kings Mill, which we didn't do the AI on, we have extensions on that also.
So do you think that the Kingsmill Township and the Crawford Township, there's a chance of this system connecting?
It's hard to say, but there is a structural orientation, and although the Kingsmill nickel is further north from the projected orientation of the Crawford and the Mahaffey Township nickel bodies, it's because of the Motagme River, which is a major fault, and that has some displacement. But it could very well be a similar system, that is a single system that run through the entire length of the project from east to west.
So obviously you liked what you've seen on the project because you got involved after being involved with Dumont. So what are you seeing at this project?
Yeah, no, I mean, fundamentally, the world is short of new nickel discoveries. We've had one great nickel sulphide discovery about, one or so per decade. And we're now entering into a period where we're going to need a vast increase in the amount of nickel supply available, as this huge new demand source for nickel in electric vehicles is just starting to ramp up. So anytime around the world I get to see a new nickel sulphide area open up, I get very excited. The great thing with Crawford was the initial drilling that was done just over a year ago highlighted the fact that has very many similarities to Dumont. The scale of the mineralization, the fact that this orbit is not 1,000 kilometers from the nearest road, but it's sitting next to a highway, just north of Timmins. And then importantly, the mineralogy and what we've seen so far, has a lot of similarities to Dumont. So we can leverage, all the work that we've done over the last decade, advancing Dumont to a construction-ready project. We can bring that to bear on, not only Crawford, but there are other nickel targets on the property that that seem very interesting.
So you say it seems very interesting. Are you eyeballing some of these other areas for future plans to expand on the deposit that you're seeing at Crawford?
Yeah, I think so. I mean, it makes sense for everybody. If you're going to build an infrastructure to explore one property, or if there are properties that share similar characteristics, to be able to sort of leverage the time and people who are in place already, and and bring multiple targets, advance multiple targets at the same time. That's something we're definitely looking at.
So Vance, you again talked about de-risking the project, and I think part of that is renegotiating your NSR. Talk to us a little bit about that process, because you've been going through that for the last 6 months or so.
Yeah, we started actually about a year ago right now, negotiating with the royalty holder and putting together terms that were acceptable both to them, because they're not in the mineral business, they're in the forestry and timber business, that we were able to initiate negotiations with respect to taking the 5% royalty off of the property. The issue with respect to that is that there was a right of first refusal holder with respect to a portion of that royalty that we had to negotiate with as well. And consequently, we've got to the point now where that royalty has been, there's been a royalty assignment agreement entered into between Noble and the royalty holder, and there's been a new agreement entered into with the first right of refusal holder, wherein the royalty will be reduced from a 5% NSR to a 2% NSR, thereby allowing the project to be more available to other participants to come in to carry out the next rounds of exploration. We recognized at the time when we acquired the project that the 5% royalty was a non-starter with respect to any kind of development down the road. But my experience has been that I've never seen a royalty on a project hold up the development of a project wherein it hasn't been renegotiated in some form or another. And this is in fact what we've been able to accomplish just recently, in fact, whereby the royalty holder has agreed to a sum of funds in order to take them out, and the right of first refusal holder was prepared to waive their right of first refusal in order to have a new royalty imposed, whereby we're going to eliminate or extinguish the 5% royalty, and the new 2% royalty will be held by the party that had the right of first refusal.
So this will essentially take the handcuffs off of you to be able to start exploring other joint ventures. I'm sure you've had some companies approach you over the years. Are there any particular areas aside from Mark's new Crawford Township venture that interest you or interest other people?
Oh yeah, I mean, we know, for example, that Lucas Gold Project has a resource on it. It needs to have a party come in there with fairly deep pockets in order to carry out an extensive exploration program. We know what the geology of that project is like. It was initially discovered back in the 1973 by McIntyre Porcupine, decent grades over decent widths. We know that we've got a 1,700 meter strike length on the primary zone. We've drilled off probably only about 650 meters of that. We know as well that there's an additional 5 or 6 parallel zones that haven't been touched, and consequently we feel that there's a very good chance for that Lucas Gold Project.
Excellent. So you've been doing a lot of drilling on the property. Well, the bunch of you have been. Where are you at now with the drilling? What hole are you at?
Yeah, so we're now on hole 13. We've delineated more than 1 kilometer of mineralization. It's more than 350 meters wide, and the drilling's gone down to 400 meters deep. And from the 3D geophysics, we know the structure goes down 1 kilometer. So that cube itself is already sort of a massive chunk of mineralization. At similar or better grades than we saw at Dumont.
Similar or better grades than you see at Dumont. So Kingsmill has 0.33 or 34. Are you seeing anything similar in the Crawford Township to what you're seeing up in Kingsmill?
Yeah, no, I mean, I think for us, again, with Dumont, Dumont's reserve grade was 0.27% nickel, and I would say on average, that will probably be in a similar range, maybe slightly higher. But the more important thing that Crawford has that Dumont doesn't, Dumont really never had one higher grade starter area that was maybe 15 or 20% better. And again, the importance of that is, if you can bring that higher grade ore to bear in the first few years of the project, that incremental cash flow, really helps the overall project economics. So what we've seen in the drilling so far, again, it's early days, but what we're seeing, it looks like, we have an area that's, maybe 0.33, 0.35, over a sizable area that that could be a potential starter area, which would be very helpful when we get to a PEA and get down to that stage of the project.
And I was going to say, so it took you a few years to kind of put all that together: a PEA, environmental studies, agreements with the indigenous people.
Yeah.
So I mean, you have a lot of work ahead of you. But given your experience with Dumont, do you feel that you can accelerate this project considerably, or is it still going to take a fair bit of time to put all this together?
Yeah, I mean, there are definite time windows. You can't rush things like things like permitting. There's a time window to do it. You can accelerate it as much as you can. But I think the benefit that we have is, one, we realized after a lot of work, several years and tens of millions of dollars of work at Dumont, that the geophysics really helps you sort of understand where the better parts of the ore body are, and help really delineate the mineralizations that's there. So we can use that as a tool to quickly get through the resource phase. And again, because to date, again, very early days, the mineralization and everything seems very similar to Dumont, that again, we can leverage a lot of the mineralogy, metallurgy work that's been done, a lot of the environmental work that's been done. And so, in terms of being able to get to a PEA, in terms of being able to get to feasibility study, and then get through that permitting process, we should be able to move about as quickly as you possibly can through it, given the experience that we've had before.
So let's talk a little bit about this deal. This is a really interesting one. You left RNC, you jumped on board with this after your experience with Dumont. It's clearly going to play a role in this. But talk to us a little bit about how you brought this deal together and how you structured it so that Noble still has a lot of value. They have VMS targets, they have gold targets, they have a huge land package, and you're only taking a small part. But I think people are lost in understanding that you're only taking the Crawford aspect of this company, and there's still a huge amount of opportunity. So talk to us a little bit about that deal.
Yeah, so again, specifically right now, the initial deal is just on the Crawford target itself. And again, Noble shareholders are getting shares in Canada Nickel, and so they'll have exposure to that. Spruce Ridge and the other parties who are involved in the transaction will also be getting shares. So everyone is going to be getting some economic exposure to what we're doing through Canada Nickel. And again, the new investors who are coming into the story, will also be able to participate in it. I think, again, in terms of project generator model, this is a sort of a perfect example that you have someone else who's going to come in, raise the capital, get it through the next stages of the project, but then the Noble shareholders still have, very direct economic interest in terms of what's going to happen going forward.
And Vance, aside from Lucas, aside from the nickel targets, what are some of the bigger prospects on your property? Maybe Randy might want to chime in here too on that.
Well, there are a number of VMS targets, and remember what I said earlier is that you have a mega VMS deposit in the Kidd Creek deposit, been in production, as I said, for 60-odd years, 160 million tons. But associated with those are normally satellite deposits that can be anywhere from 30 to 50 million tons. And that is the basis of the VMS targets that we have within that 79,000 hectare block of ground. You got to remember that you're dealing with infrastructure galore here. You've got road, rail, power, water, infrastructure, contractors, labor supply. You're within 20, 30 kilometers of Timmins, which has seen gold production in the order of about 70, 75 million ounces or thereabouts. It's seen the VMS or base metal production out of not only the Kidd mine, but others in the area as well. So it's a question of location, location, location. And Randy, you might want to just chime in with respect to the VMS potential.
Definitely. We have, based on our geophysics, and we have also done quite a bit of gravity work in it. And the Kidd Creek deposit was a huge EM anomaly, no magnetics, and associated with a gravity anomaly. And we try to use that model on the project area, especially in the two townships that adjoins the Kidd Creek deposit. To reiterate what Vance has said, VMS deposits occur as in clusters. There are up to 35 bodies that could be associated with one mega VMS deposit, and Kidd Creek is a mega VMS deposit. So we think within Carnegie and Crawford Township, we are what you might say, that would be the Goldilocks zone of VMS as it relates to the Kidd Creek deposit. The signature, the footprint of a Kidd Creek is very small. It's something like 125 meters in width, 250 meters in length, and it's very hard for geophysics to miss. So this is why we have been going to various, try to think outside the box, we did the gravity survey, we did the artificial intelligence study, and we have identified areas within that those two townships that are VMS that should be explored for VMS target. Apart from that, we have about 9 nickel bodies, or we suspect there could be potential nickel bodies that Mark has alluded to earlier. And in terms of the Lucas gold, we now have a very good understanding of the mineralization and the structure that control the mineralization. Essentially what has been happening is that we were drilling angle holes into this body, and the mineralization is essentially like rungs of a ladder stacked. So you can hit something or you could miss it very easily. So what we've realized now is that we drill shallow angle holes to locate the structure, and then drill almost vertical holes to get a good feel of the mineralization and the grade. And that is the key to moving Lucas forward now. And like Vance had said, we have the structure that is 1,700 meters long, and that's the main structure. We only drill about 650 meters of it. We have 6 additional IP anomalies, and this was a beautiful IP anomaly that associated with the Lucas gold deposit. So we have 6 of those other parallel structures that has to be followed up on. There is also a number of what we call drill indicated gold showings on the project area dating back to the 1960s. Essentially what happened in the 1960s is Inco had a proprietary airborne EM system that they flew over the entire project area, and every airborne anomaly they tried to locate on the ground. Once they were able to locate it on the ground, they punch a hole or maybe a couple of holes in it, and this is how come we have so much information on the whole project area. And back then, Inco was looking for very high-grade nickel deposits. So all these low-grade nickel deposits that were discovered, they never did any major follow-up on. The same thing with the gold. They had gold intersection, but the grades weren't anything similar to what they were getting in the lower part of that whole area, which is along the Porcupine-Desta Fault in the Timmins area. So these things were never followed up on, and now the economics is completely different.
I'd also like, the other thing I'd like to point out is that the entire project area is one that is, in the Timmins vernacular, totally underexplored. And the reason for that is, one, it was held by a landowner that was a private landowner. They're in the forestry and timber business. They would enter into joint venture exploration agreements from time to time with other majors. But to a large extent, it's totally underexplored, one. And two, it's totally overburden covered, which means that there's no exposure. The only geology that you gain is through the drilling of the project area. And consequently, with it being underexplored, we feel that there's an opportunity for additional finds in this particular area.
Yeah, I think there's sort of two key things. One is there's a great slide in the Noble presentation which shows all the, and I encourage people to take a look at it, is you can see all the government filed work, and you basically, it's covered all around the property area, and then within the property area itself, again, because it was held by a private landowner, there's really only been sporadic work done. Again, a lot of that work was done in the 60s and 70s, and because it was a super major like Inco at the time, the companies wouldn't necessarily go and hit every target with 1 or 2 drill holes, but Inco did, and as these guys said, they found stuff that in 1960, when nickel was $1 a pound, and gold was $35 an ounce, wasn't particularly interesting, but in a $1,500 U.S. gold environment, in a nickel price environment that we think is at $7 and going to be going higher over the next decade, it basically gives you some pretty good touch points in terms of just how mineralized this entire property could potentially be.
Just to follow up on what Mark was saying with regard to the underexplored nature of the project area, we got to remember that even though there were joint venture partners or exploration partners that would come in on the land package from time to time, that they would be carrying out their airborne projects based on aerial photographs or photography. There wasn't at that time any such thing as GPS around in order to specifically identify and locate the targets from your airborne geophysics, number one. And number two, because the entire project area is overburden covered, the only way that you're going to be able to determine the geology of it, which is what leads to your mineralization, is through a drilling program. And consequently, you're dealing with something that is totally and has basically been quite underexplored without question.
Yeah, no, I think one of the things too, in particular, just using VMS deposits as an example, we've really kind of had 2 waves of big discoveries. So back, at the early part of the century, using Canada as an example, that first wave, you basically had to walk on a deposit, and that's when we found the Sullivan mine in BC and Flin Flon deposits in Manitoba. Then in the 50s and 60s, as airborne EM came through, it allowed you to see, a little way down into the ground. And that's when we found Kidd Creek, near Timmins, and then also Brunswick, out in New Brunswick. Those mines are now coming to the end of their life, and we really haven't found any more sort of giant discoveries. And so I think that's one of the exciting thing about things like AI. Right? We need new tools, and maybe it's a combination of AI with the ability to see much more deeply now with the geophysics that we have. That's going to create that new wave of big discoveries. And again, that's the great opportunity here to have such a massive land package and a very mineralized camp that's had a fraction of the exploration that a lot of other properties have around the world.
So now you've got all your geophysical data, you've got your NSRs negotiated, or for the most part negotiated. Mark is going to be heading up the nickel deposit. Is it fair to say that it's game on time for you now, Vance? And
No question about it. Yeah. No question.
What, in a perfect world, what would you like to see as far as exploration dollars being dumped into this project over the course of, say, the next 2 years?
Our goal over the next 36 months is to have something in the order of 8, maybe 10 project participants or option and joint venture partners, and with an object of anywhere from $15 to $20 million in the next round of drilling exploration carried out over the project area. One thing we do need, though, is an improvement in financial resource capital markets, because they have been quite stagnant over the course of the last 7-8 years, where risk capital has been taken up by either cryptos or cannabis issues or whatever. But at some point in time, with what we're seeing now with nickel prices having improved, that you're going to be looking at, I think, a resurgence in commodity pricing on a global basis, which therefore is going to start to generate a better feeling for the resource sector. I mean, these things run in cycles; they always have, and we've been through a downturn in this cycle for the last 7-8 years. I expect that we're probably going to start to see an improvement in those cycles. I mean, gold is certainly much better than it was over the last little bit. Nickel prices are up. You start to see improvements on the global economy where the infrastructure build comes along. You're going to see then a boom in your commodity pricing, whether it be in your base metals or your nickels or even your golds, for that matter. And consequently, the money will start to flow back into the resource financial capital markets.
I'm glad you touched on that, because I wanted to ask you, Mark, you're pretty knowledgeable when it comes to LME stock, and you know, kind of, you've been following what's been going on with nickel. There's some news this week about nickel that came up. How do you see that affecting the market in the near term, and where do you see nickel heading, let's say, over the next year to 2 years?
Yeah, no, I mean, right now I think we've just sort of had the first leg of what looks like a nickel super cycle. Nickel has always been a volatile metal relative to the rest of the base metals. And about every 15 or 20 years, there's a sort of a confluence of supply and demand issues, that create, really high-priced nickel environments. So, in the late 1960s, we got to a point where nickel prices were $50 a pound in today's terms. We then revisited, we went to another super cycle in the late 80s when, nickel prices got up to $8 a pound. Inco issued $1 billion dividend, at that point in time. And then, again, what we just went through, in the mid-2000s, where we saw nickel prices get up to, up over $20 a pound, or, up over $50,000 a ton. And so, what generally has set the stage for it is there's been specific issues in the nickel market which have really sort of resulted in a significant underinvestment in new supply, for a 10 or 15-year period. So, with the spike in the nickel prices last time, a bunch of projects got built. Nickel pig iron came on the scene, and that's been managed to fill the, overfill supply, for a period of time, which meant investment elsewhere in the industry has been almost non-existent. And where it is now is nickel has always been a very high growth metal. It's been growing at 5% a year. What the significance of that is, and that's about twice the rate of copper and zinc. What the significance of that is that you need to double supply every 14 years. That's a lot of new discoveries, in a relatively short period of time. And so, we've now come out of 10 to 15 years of underinvestment, where most of the traditional supply has been shrinking, because companies haven't been putting that in, and now you have this new source of demand in terms of electric vehicles. So, stainless steel alloys and so forth, have continued to underpin and will continue to underpin nickel demand growth going forward, at 5% or so a year, and you've got this huge source of demand on top of it, which is going to require us, the challenge is we have to go find and put into production by 2025, relative to where we were in 2017, all the nickel supply that existed in 2010. With another sort of burst of continued growth in electric vehicles, you're going to have to do the same thing again by 2030. And there just aren't aren't the projects in the nickel project pipeline. That's, when I went to RNC back in 2010, it was about getting a nickel project ready for the next nickel cycle. It took a few years longer to get there, but I think we are now at that point, and and that's what's exciting about Crawford is there's basically no large-scale new nickel sulphide discoveries out there.
That's amazing. So it's safe to say that this is probably a really good time for a project like this to grow some legs and get running.
Oh, big time. And I think the other point too, from an investor perspective, is okay, when should you get in? When should you get in? Nickel prices have always been very volatile. So, what we've seen over the last 6 months has been a classic nickel move. So last April or May, nickel prices were probably in the $4 to $5 pound range. People were bearish on nickel. And a few things happened, and within 3 months, last September, we hit, a few months ago, we hit a $8 pound level. Again, having been through it a few times before, I knew it wasn't sustainable. But you can see, I've been, on film saying, prices are going to probably drop 15 or 20% by year end, which is, what we have happen, because a new spike in nickel prices, leads into a big increase in production in nickel pig iron, and it also leads into a big surge in scrap supply, which is important for the stainless steel market. But once those stocks get used, they're not there. They're not there again. So you see the deficits open up again. In 2005, we went to a period where nickel prices, had been at new all-time, new highs for nickel. By the end of 2005, they'd fallen back down to $5 a pound. People thought, oh, the nickel market's done. It was all a big promote. There's no real shortages of nickel appearing. 16 months later, we were over $20 a pound and at $54,000 a ton. So nickel when it moves, always moves very quickly. It's not going to be an easy ride to get in early, but I think if you want to make sure that you're not chasing the market higher. So take advantages of these rollovers in the nickel price, to position yourself in good quality stories, and you'll, I think this is one of these great, once every 15 to 20 year opportunities that we're just in the early days of.
So big question. When are shareholders going to see their spin-out happen? What is the spin-out ratio? And are you planning to have this done by year's end, or how does that come along?
We're trying to get as much done by year end. It might spill over early into the new year. But in terms of just going through all the regulatory, process to get Canada Nickel set up, we're working our way through that. We're, a long way down the path. Fortunately, Christmas time shows up. That sort of kills a number of days. But, I think, that's the plan there. And then I let Vance talk about Nobles specifically.
Where we are with respect to the plan of arrangement, which is what this is, it's under a plan of arrangement. And that accomplishes two things. Allows Noble to spin out a portion of the Canada Nickel shares to its own shareholders on a tax-free basis. And that implies having a court order in order to do so, a shareholders meeting in order to approve the plan of arrangement, and then the final court approval, post the shareholder approval, and then the spin-out. So we're looking at, the meeting is set for Noble for December the 27th, and I would expect it'll be early in the new year when the spin-out takes place.
Okay, do we have an idea of how many the spin-out shares?
That's going to be totally dependent upon the number of Noble shares that are outstanding. Right now, there's 125 million odd shares that are going out. There's 10 million shares that are going to be issued to Spruce with respect to the termination of the joint venture agreement we had with them. There'll be an additional 4 or 5 million shares that'll be going to the right of first refusal holder. So let's say there's 140 million shares outstanding, so it'll be a ratio relative to that.
So can you talk to us a little bit about the board of directors that you've put together and who you're moving forward with to see this project through?
Sure. So it'll be myself and then John Letty, who's going to be part of our management team, who I've worked together with for the last 5 years. In terms of external directors, I think we've got a very strong slate. Dave Smith, who's the CFO at Agnico Eagle. He's also a mining engineer and it was an award-winning IR person for Agnico. So again, is able to provide a huge range of strengths that we're really excited to take advantage of. We also have Russell Starr, who's worked with a bunch of other junior mining companies, and again, in terms of our stage of story, where we want to get this out to as many investors and really tell the story. He's got a great set of skills and depth there. And then the third person is Mike Cox, who ran Vale's downstream operations in the UK and in Asia. There's a lot of people today who talk about nickel and battery materials and the importance of that. The reality is there's very, very few people who've actually made nickel products and talked to battery consumers who've used those nickel products through multiple generations of nickel batteries. So to have someone like that who's worked in Asia, worked in China, and made those products that have went into those generations of nickel batteries is a great add to the team. So I'm very excited going forward with that group.
And will you be continuing to work with Randy on the expanding your footprint of Crawford? Because I'm sure eventually it's going to come to fruition that there's other nickel deposits, or it ties together in some way, at least from what I've seen on the maps, Kings Mill all the way down to Crawford. There are some showings in between. What's Randy's involvement going to be with
most
this?
definitely. I mean, at the end of the day, we want to take advantage of the expertise and the experience they've had, with the property and the thinking about it for 7 years. To be able to take that and then have the capital to be able to push it forward is going to be great.
So I'll leave it off with this. Tell us, speak to the shareholders and let them know why Canada Nickel is a good investment for them to jump into, and what you see moving forward.
Yeah, no, I mean, fundamentally it comes down to three things. One, we think we're in the early days of a nickel super cycle, and so getting exposure to good nickel stories I think is very important right now. I think two, Crawford right now, again, very early days, we're still hole number 13, but what we're seeing so far, the geophysics gives you, allows you in these kind of deposits to really see the scale of the footprint, and that footprint is larger than Dumont. And so, we think, we will have one of the, truly, great nickel sulphide discoveries of this decade. And then, the third reason is, not only are we have a great property, we've got the team that's done it before, that's been able to take it right through to a construction-ready project. And again, in a market where there's, lots of EV companies, lots of majors now that want exposure to nickel. Having a project that can be construction ready as soon as possible is going to be, I think, attract a significant amount of interest. So,
Vance, I'll say the same thing to you and Randy. You guys have been on this project since 2011. You've elaborated on the opportunities that are there. Why do shareholders want to get in now and stay with Noble throughout this process of spinning out the Crawford Township?
Well, I think there's an opportunity here for a number of deposits to be discovered over the course of the next 3-4 years. And if we are at the early stages of the next round of commodity pricing, it's going to have a tremendous impact not only to the Noble shareholders, but to those other option and joint venture participants that come into the project.
And technically, these bodies that are on Project 81, including the Crawford nickel deposit, it's not just only nickel. There's significant cobalt associated with it, and also measurable PGEs associated with it. So there's a lot of value added to these bodies that are present on Project 81.
Yeah, and I think one of the things right now is the first round of financing that we've got for Canada Nickel in place. That's fully financed, spoken for. That'll take us through the first work of exploration and the work that we need to get done. So again, if investors want to get exposure to Canada Nickel, the only way you could do that right now is by buying either Noble, or Spruce Ridge shares and getting the dividended shares out of that. The Noble meeting's been set, so again, I think if you think about what the valuation for Canada Nickel could be at some point, and you want to get in there before we start trading, I would buy Noble today, buy Spruce Ridge today.
What could the evaluation of Canada Nickel be?
I can't say that.
All right. Well, thanks for taking the time with me today, guys. I really appreciate all your input.
Thanks a lot, buddy.
Cheers. We'll do this again real soon. Thanks.
Thank you.